Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, the 8th of April, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Welcome, Jim. Jim, you always give me a good morning. It's good afternoon for me, but good afternoon, good evening, good morning to you, Jim. Anyone else want to say hello? Please feel free to type into the chat and just say hello. It'd be good to hear from you. Also, any questions? You don't give many questions, but anyone got any questions, throw them in the chat, please. It's pretty much the same old. It's going to be a fairly brief webinar this morning. What's there to say, right? Market's super choppy. Yesterday, 5% down, 5% up, settled relatively unchanged. So that's a round trip of, 5% down, then 10% back up to be 5 up, and then 5% back down again. So the market moved like 20% yesterday, arguably, in its full trip. And so you're just watching out for that increased volatility. Technically, I'm a technical analyst. That's what my kind of, the day job is, kind of stuff. Well, not so much, I own trading now, but my career has been mostly as a technical analyst, and I trade technically. And if you look at the daily charts, we've got what's called long-legged dojis. So these big doji pattern and their potential reversal patterns, particularly when you've had an aggressive move. The markets need to clear above yesterday's highs, though, to signal reversals, and we're not there yet. So those are going to be the basic lines in the sand. We'll take a look at those shortly. Data front, is anything really important? The most important thing in here is going to be daily speaking at 2:00 today. What has daily got to say? Obviously, there's massive market turmoil. Anything we can get out of Fed speakers is going to be super important to give it any kind of hints of what they're thinking. Are they worried about inflation more than they are worried about growth? Are they going to, in the wait and see mode, wait and see what happens? Or is it like, well, clearly what's happening with tariffs is not good, so we need to act sooner rather than later? So daily is going to be super important at 2:00. Any Fed speakers we have going forward also going to be super important. Don't forget the price limit and circuit breakers. I'm 90% sure. I'm not going to say 100% sure. I'm pretty sure though. Circuit breakers work both ways. So they break on the upside and on the downside. So the circuit breakers come in at 7, 13, and 20%, and the trade day rule is 2% within those. So they're going to be at 5, 11, and 18%. So if we get a 5% up moving here, if you're on a funded account, funded sim or funded live, you should halt trading. And obviously the market then kicks out at 7%. I'm pretty sure that's up as well as down, but I'm not 100%. I'm pretty sure that these price limit circuit breakers are on the. Oh, let's have a quick look at the CME. It says it here. Price. It just says price limits. I'm pretty sure that they're both ways. I think they're both ways. Yeah. Oh, yeah. Mark, up or down. Yeah, up or down. It is both ways. I thought it was both ways. So both ways, right? Okay, so we're watching out for those. Here's the morning briefing. America's in here, all about the tariffs, all about basically Trump being called out by multiple billionaires. Basically, Ken Griffin is speaking. Spoke. Larry Fink, CEO of BlackRock. We had who did we have yesterday? I can't remember. We had someone Ackman yesterday. So these very wealthy fund managers, guys who know the markets, being very vocal. Marko Kolonovic, I don't know who that is, one of the best known market strategists around, likening what's happening in the White House to a clown show. I popped all of these links out anyway. Clown show. It's not bad for markets. It's actually bad for Trump too. China vowed to fight to the end. Bessent said everything is negotiable. Japan first in line now, getting on the phone and trying to actually cut a deal. And so we're talking all about that. Panic buying at the Apple Store, concerns about prices going higher. Let's just look at some of these then. So Japan's scores top spot in line for US tariff talks. So Japan was the biggest threat to. So now, H. Number looks set to get priority in tariff talks, moving to the front of a call with countries. So that he's already had a call with them, I think, already. There's Ken Griffin calls tariffs huge mistake, hurting middle class. Larry Fink says most CEOs he talks to thinks US is already in a recession. Klonovich sees Trump ending tariff clown show to save stocks. Already opened that one twice. China vows fight to the end on tariffs if it props up markets. Besson says everything is on negotiating table. Stocks recover as Japan sets tone. So some hopes in here that we will, basically Countries will come to the bargaining table, negotiation table. Some of the tariffs, or a lot of the tariffs, will be rolled back in, and then markets will recover from there. Goldman Sachs though warns of a bear market. Well, we're kind of almost there anyway. BlackRock downgrades U.S. stocks, and from Reuters, U.S. is starting to look like an emerging market. Some of these moves are like emerging, they're like emerging market currencies. The way these, even last week we saw the Australian dollar moving like an emerging markets currency. You'd argue that 5% down, 10% back up again to be 5% up, and then 5% back down again yesterday for the S&P. That's the kind of thing you see on emerging market currencies or emerging markets debt. Futures are higher though overnight, so we've seen everything higher. Asia's up, Europe's up, futures up in here, and then as I say, the key levels for me are going to be simply yesterday's highs. If we clear above yesterday's highs, we could get a squeeze back in, and bargain hunters coming into the market. Sideline money looking to go long. Tariff-driven Wall Street pain sparks investors to way more gloomy scenarios. But here's Asia. Look, Nikkei up 6% today. Hang Seng up 1.5% in here. European exchanges between 1.5% and 2% higher. And if we look at the US futures on the overnights, I want to pop this out. So we have overnight in here, Dow's up 2%, S&P up 1.5%, Nasdaq up 1.4%. Jim's saying I found the live market commentary very visual lately. Yeah, with all the volatility and unexpected news. Yeah, that's great, Jim. Yeah, I think it's a great shout. I should have shouted that out myself. Go on to the members area, guys. Click on that live scoop. We effectively pay for that for you guys, right? You get a super good deal. That's worth like $200 a month anyway, in its own right. If you went and bought that direct. 150 to 200 bucks if you buy that direct. That live market squawk from our partners at Live Squawk is a great asset. And as you say, Jim, in here, when we have this kind of volatility, when there's breaking news, those guys are sitting there monitoring all the social media. That means you don't have to. So they're watching Trump's Truth Social. They're watching Twitter. They're watching the POTUS Twitter feed, Trump's own Twitter feed. They're watching all of this stuff, right? They're watching for rumors. So when the market moves, they'll give you an idea. Is this moving just because it's a flow, or is this moving because there's something else? So in some ways, you might want to go against it. And sometimes, though, if it's a new piece of news hitting the market, you certainly don't want to stand in the way of it. So that's a great shout, Jim. Yeah, that live market commentary is certainly worth turning on. And it's certainly worth having on anyway. So this is receding. Remember, this was up to 50-50 for a May rate cut. We're back to effectively 70-30, so more chance of not getting a rate cut in May. But the market now more aggressively June. We're now priced in. There's no chance, hardly any chance of no rate cut by June. And we're basically 2/3 to 1/3, whether we get 25 or 50 basis points in June. July now, we're looking for the best chance in here is we're already down 50 basis points with a 25% chance we're down more than that come July. And by year end now, the market's starting to price in 4 to 5 rate cuts. So you can see in here, that's 4 rate cuts. So at least 4 rate cuts now. Yesterday, we were pricing in almost 5 rate cuts, 4 rate cuts now by the end of the year. And bonds had a big reversal back to higher yields in here, so for lower prices. So even a sell-off in bonds yesterday. That sell-off in bonds coming from, so that's higher prices, lower yields. That sell-off in bonds coming from real concerns of real negativity for the US economy, particularly a stagflation scenario. So you don't want to own bonds either. So everything pretty much selling off, at that point in here. And if you look at bonds in this big setup there, we're maintaining a bullish theme because of the strong rally we had before that. But if you look in here, that there is real risk in here that we're making a note in here on all these markets that, yeah, we're bullish for now, but there's risk that this shifts to more bearish. Very bearish sessions in here for all across the US futures, fixed income bond futures markets. And here we had those strong rebound that we got yesterday after the big. So Doji in here, failure in here threatens a bullish reversal. So that's what we're saying in both of these in here, for both the Nasdaq and the S&P, raising bullish reversal concerns. And for me, these are quite simple. So these are called long-legged dojis because they got long extended legs in here on the candlestick, and it need a long-legged doji reversal is above the peak. Okay, in this case. So in here for the ES, the S&P 500, 52.86.5 above there would signal confirm a a reversal. It's simply up above that spike high, and we're getting there, right? Same story on the Nasdaq. It's above the peak in here from yesterday. That peak, I need to open this up, can't see. So the peak from yesterday, sorry, one sec. We are up at 18,361.5. Above there signals a reversal, and there you see the spike, and we're getting there, right? We whipsawed back up. We're choppy into the close. Still, we did post a positive close, and these here grind up in here overnight. As we said in here, stock indices up around 1.5% to 2%, depending on which market you're looking at. So all the risk in here after a bullish reversal. We put that in last night in our commentaries in here, and really it's just above those peaks from yesterday. So we get above those peaks from yesterday, and it starts to look potentially more bullish. So watching out for that. Don't forget as well about the potential for the circuit breakers in here. Okay, so if you're in a funded account, sim or live, you need to be stop trading if we are up 5% or down, up or down 5% on the day in here, and at 7% the circuit breakers will kick in. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Helmets and goggles on yet again. Thanks for participating today, Jim. Always good to have you on. Anyone else want to say hello? Say hello. Any feedback, as Jim's given us, or any questions, please feel free to throw them in going forward. I'm going to wrap it up here. I'm going to wish you all a great trading day. We'll be back with you with another Bull versus Bear webinar tomorrow. Bye.